Welcome to Biz News with Edu, and today we are tackling the incredibly thorny issue in South Africa of wealth taxes.
The funny democracy, funny legal system.
Like and subscribe for more.
Wealth taxes are now under consideration by the Davis Tax Committee, and they are a notoriously complicated and expensive type of tax, both to administer and to be able to comply with. At the moment, we already have three types of wealth taxes, that being estate duty, that being donations tax, and that being transfer duty. And those three taxes combined bring in only 1% of South Africa's total tax revenue, while at the same time the cost of administering those three types of wealth taxes that South Africa already has costs almost the same amount as what those taxes bring in. So in other words, there's almost a zero net gain for the South African fiscus. So will bringing in new and even more complex wealth taxes be the way to go for South Africa to be able to generate substantial new tax revenue? Because after all, looking at the way Treasury is going at the moment, South Africa is in desperate need of new tax revenue. The junk status downgrade has just meant that the cost of borrowings has gone up exponentially, and so which means that there needs to be new tax revenue to fill the gap, and that's why we're looking specifically at wealth taxes at the moment. One of the things that is being looked at more closely is a type of property tax, a type of land tax, but that would involve land and property getting valued on an annual basis, and you getting taxed on the increase of that value. But let's just unpack that just a little bit further. Say you buy a property for R1 million, and you take out a bond for R1 million. So you got R1 million property, you got R1 million bond. Do you have any wealth growth there? No, you don't. If during the course of the next year the property value goes up from R1 million to R1,050,000, there's capital appreciation in there of 50,000 rand, but it's unrealized capital appreciation. So unless you go and borrow more money from the bank, you won't have the money to be able to pay the tax on that book value appreciation of 50,000 rand. So how that's going to be administered is going to be a complete and utter nightmare. South Africa is better placed to be maybe looking more closely at how the government spends the money that it has, rather than looking at creating some new type of wealth tax that is going to be just about impossible to administer, and what's more, it'll be costing more to administer this tax than what the government will get out of it. And maybe another way for the government to be able to tax high net worth individuals would be to follow the same proposal that Jean-Luc Mélenchon, one of the candidates in the French presidential election, stated, and he's way left-wing. If you think the current South African government is leaning to the left, well, this guy is just simply out of the park left-wing. His proposal on his running ticket, and that got him into 4th place in the first round of presidential election results in France, and his proposal is that above a certain amount of earnings, your earnings that you earn for the year are taxed at 100%. So let's just convert that out to a South African context. Let's just say the top 1% of earners in South Africa, those are the people that earn more than R1 million a year, those are your top 1%ers. Say the Davis Tax Commission had to implement a tax regime of 100% tax on the earnings of people that earn more than R1 million a year. Number one, have to take into account that already over the course of the last 1 year, 34% of the white millionaires in South Africa have emigrated in 1 year, just in the past year. So If a 100% taxation comes in on earnings above $1 million, you can be rest assured that a vast number of the remainder of those millionaires will leave the country as well and take all of their earnings and take all of their cash tax revenues off to another tax climate. Then there's another factor as well. Every single member of the South African Parliament, even the backbenchers, earn more than $1 million a year, and are all of those parliamentarians collectively going to vote that their salaries get taxed at 100%? Well, you never know. Maybe they will, because maybe what they're earning on the side from deals on the side from emanating out of the Saxon World Tribune, for instance, generates them enough sideline earnings that having their government salary taxed at 100% won't affect their lifestyle one bit. But that's a matter for a completely different day. So there you have it. From my perspective, I'd say that wealth taxes in South Africa will be more expensive to administer than what the government can hope to possibly generate out of them. What do you think? Post your comments, questions and criticisms in that comment section down below. Don't forget to give this video a thumbs up, share it out amongst your friends. If you're new to my channel, hit the subscribe button that's down there, and last but by no means least, until the two of us meet again, try not to get yourselves lost or killed, and I'll see you next time.